The following is a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Hello, I'm Brian Akers. Today I have certified financial planner practitioner Alex Monk with me. He's been in the industry and with Akers Financial Group for over 9 years now. He knows what he's talking about when it comes to taxes especially. So good morning, Alex. How are you doing today?
I'm great, Brian. It's good to be with you today.
That's cool. Now, those out there, today's show is this: understanding the game of taxation. So on the radio show, Winning in Retirement, we do want to bring many, many topics. But one of the most important topics that you need to understand is about taxes. You need to know what you're paying. You need to know how to minimize the taxes that you pay in a lifetime. It's not just about last year's tax return or this year's tax return. It's about a lifetime of taxes on your money. So understanding the game of taxation is our topic today. And what we want you to understand is this: you need a guide, a coach to guide you through the game of taxation. Have you seen this in action, Alex?
Absolutely, Brian. This is one of my favorite things to talk about because it's one of the biggest places that most advisors ignore, and it's really one of the biggest concerns for a lot of the clients that we meet with because they worked hard for their money and they don't want to give it all away.
Absolutely. It's real difficult to understand that you save money, grow money, but then you got to pay taxes. Now, I like to think that if you do well, you pay taxes, and you need to understand that the better you do, the more taxes you pay. The idea here is this: there is a game to it. Now, when you're trying to explain the game of taxation, where would you start, Alex?
So I start with where they're at right now, and I say, okay, well, let's figure out what your tax bracket is. So let's talk about tax brackets a little bit. Tax brackets go up the more money that you make. For example, the 10% tax bracket is up to $20,000 roughly for married and about $10,000 for single. The 12% bracket comes in next, and it's all the way up to $80,000 if you're married, up to $40,000 if you're single. And then from 12, Brian, it jumps to 22. 10 to 12 is not a big difference. 12 to 22 is 10% higher. So the tax brackets are like steps. Once you get to the next one, it doesn't go all the way back. So when people think, oh, I'm in a new tax bracket, it's only for that new additional money over the last tax bracket. And that is important to know, but there are some issues when you do jump tax brackets. It has different types of taxation on dividends, capital gains, things like that. So we got to find out where they are and then project out the income and see what's the future look like. Where's your income coming from down the road? And that gives us a kind of a roadmap of when do we want to pay taxes? Do we want to pay them now? Do we want to pay them in the future? Do we want beneficiaries to pay them? So there's a lot of different questions that come about, and that's where we really start putting together a tax plan so we can pay taxes on our terms when we want to.
Right, so that's the basic, the game of taxation. So I thought today what we'll do is we'll start with real basics of a tax return with some terms and some information that each person needs to understand the words that we use today. So you've used the word tax bracket already. I will come back to that a little bit later. But let's do some things such as the first word, 1040. What does that mean, Alex?
It's like saying 10-4, you understand? No, it's the federal form for your taxes. So when you file your tax return, it's on a 1040.
All right, so that's for federal taxes, and then you also have to file the state you're a resident of, if that state has income tax, which Maryland definitely does. So on a 1040, it sure seems like a lot of personal information goes onto the form. What is some very important information that needs to be put together to do a tax form?
Well, you definitely need your name, and then your social security number are two big things. The next thing they're going to want to know is your address. And from there, they need to know information about your dependents, which could be kids, could be other family member that meet the qualifications of a dependent. You also need all your income, all those documents you get at the end of the year that the IRS has already received, that they will know if it's not on your tax return.
Yeah, so when we talk about income, what are all the things that count as income? I'm not going to make you list every one, but what's general? The simple stuff.
So we have earned income, like wages. So if you have a job and you work, you have to report that. If you're self-employed, you need to report that type of income, which goes on a different form than your W-2 incomes would. You're also going to need to know any interest you've earned that year, any sales of assets, whether it's stocks, bonds, real estate, collectibles, gambling winnings go on there too. What else you got on there? Tax refunds from the prior year if you itemized. What am I missing, Brian? Unemployment income.
Yeah, there's so many different ones. So really, any money that's coming in the door, most of it's going to be taxable, and they'll produce a tax form that usually comes January, mid-February each year. Versions of W-2 versus 1099, all kinds of different things. And then, of course, there's the whole business side of it. There's a lot of pieces, but all of this income on your tax return gets combined to have a magical a total called adjusted gross income. Now, the adjusted gross income is sort of just a combination of all the income that you've made, and it puts it all together. And it's a good thing to understand that your adjusted gross income is your total of all your money. So if somebody ever says AGI, that's adjusted gross income. On the normal 1040, I think it's line 11. And this is before you take any deductions or anything. The only deduction you're allowed above that is this new, I think it's $300 you can take for charity if you file as a standard deduction person. Is that true?
Yeah, so it's $150 per person. So if you're married, filing jointly, you get up to $300.
Yes, that's been missed by a few people when you do your tax returns in the 2020 tax return. When you do something called a standard deduction. So can you explain standard deduction and itemization?
So the standard deduction is the government set amount that you get to take off of your income. And a couple of years back, a lot of things changed in that world. So it used to be much lower. The Tax Cut and Jobs Act of 16, I think it was that year? It's 2016. 18. Even numbers. So they jumped that deduction way up. And what that did is it stopped people from being able to itemize. And itemized deductions are things like medical expenses over a certain percentage of income, real estate, property taxes, state income taxes limited to $10,000, mortgage interest, deductible points on your mortgage, charity, cash gifts to charity. And I think that's it now, because they took off miscellaneous employee expenses there recently. So there's a lot of stuff that you can't put on there anymore. And then you got to figure out which one's more, the standard or the itemized.
Yeah, I was just thinking that a tax return is really like a basic components is you take all your income and combine it all together, and that's called an AGI, or adjusted gross income. And then the next section is where you take a standard deduction or itemized deduction. Now, the standard deduction is used by over 90% of all filers now. But it's still important to keep track of all your expenses each year, just in case there's a year where it makes sense for you to actually itemize. Many people that give a lot to charity do itemize. So what happens is you take the AGI minus the deduction that you pick, standard or itemized, and then you get this magical number, taxable income. Can you try to explain what taxable income means to everyone, Alex?
So the taxable income is what they base your tax due on. It's your AGI minus your standard deductions. And those are deductions, not credits. So those are two different things. Got to be very clear there. A deduction comes off your AGI before the tax. And then once your tax is figured out, there's other types of credits which actually offset that tax owed directly.
Yeah, so when you're looking at tax returns, what you see is this. People have adjusted gross income at certain levels, and then they have their standard deduction or itemized, and then they have taxable income. And that's when the tax brackets come back. The tax bracket is based on this taxable income number. So what you'll find is that sometimes in married filing joint couples, if they have income of about $105,000 adjusted gross income, they subtract $25,000. All of a sudden, they're around $80,000, which keeps them in the 12% bracket. What happens, though, is some people work multiple jobs. And when they work multiple jobs, they start adding this income all together. And when you pile income together, your adjusted gross income could increase. And then after deduction, you could find that your taxable income sits in that next big bracket that Alex mentioned earlier, the 22% bracket. So understanding what's income, making sure you make the most of all the deductions, and then getting all the way down to your taxable income is really the basics of tax preparing. What do you think about how people can help themselves when it comes to this kind of calculation, Alex?
Well, you could use a calculator. That'd be one place to start. Or you could call a tax professional or a financial planner and get walked through it. I mean, it's a complicated thing. And they change the rules every year.
Absolutely. It's like any game that you like to know the rules of the game. So our show today is called Understanding the Game of Taxation. So understanding the basics was this first quarter's talk. Trying to understand, so you understand these terms of AGI, standard, itemized deduction, and taxable income, and a little bit about tax brackets. Because what we want is this. We want you to win in retirement. We want retirement to be a lot easier on you, where the biggest worry of your day would be where you're going to drink your morning cup of coffee, where every day seems like a Saturday, free of stress. We want your retirement income and investments, and of course the taxation and the tax calculations, all done by a trustworthy team of advisors at Akers Financial Group. We would love to help you with this. You can call for a free meeting by giving Akers. You can give Akers Financial Group a call, and that's by calling us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voicemail, and Susan will call you back on Monday to schedule a virtual meeting through phone or Zoom, or an in-person meeting, mass to mass. Hopefully things will get better here real quick. Start planning for your retirement now. Call us at 833-946-7384 or visit AkersFinancialGroup.com. Did you know that the federal tax rates are the lowest they have been in your lifetime? In the second quarter, we'll explain how to take advantage of this.
You are unique. Just as no two fingerprints are alike, each individual's financial situation is uniquely their own. That's why the Akers Financial Group's team of advisors begins each relationship with a proven process that identifies your financial fingerprint. We'll guide you through a series of steps designed to provide a complete and accurate snapshot of where you are right now. Everything we learn about your financial fingerprint will become part of a detailed financial plan created especially for you. We'll never give you a cookie-cutter proposal or suggest a one-size-fits-all portfolio. The financial plan takes you from where you are now to where you need to be. Begin by discovering your financial fingerprint right now by going to getmyfinancialfingerprint.com. That's getmyfinancialfingerprint.com.
Member FINRA SIPC.
Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Akers Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
Tournament time is here, and you're definitely looking to throw down a bet or two. Let BetQL help you become a better bettor. BetQL analyzes every bet from every tournament game and ranks them all on a scale of 1 to 5 stars. Their 5-star bets are your most profitable opportunities and have shown real proven results. Look, your brackets might bust, but your bankroll doesn't have to. Visit BetQL.com/March today and start your own Cinderella story. That's BetQL.com/March.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers, and here with me today is Alex Monk. We're certified financial planner practitioners from Akers Financial Group. We want to welcome you back to the second quarter of Winning in Retirement. Today's show is called Understanding the Game of Taxation. Yes, it's tax season, but boy, you really need to understand how taxes work, how they apply to your life now and in the future. And we feel that there's many topics you need to be an expert in, but one of the things you need to do is to know what you know and know when to get help. So this second quarter, we're going to start out with a very good question, and that is this. Did you know that the federal tax rate are the lowest that they have been in your lifetime? Alex Monk, what do you think of that question?
You know, that's kind of a funny question, Brian, because you would think right now with everything that's going on, the tax rates would just be jumping, but realistically, what happened in 2018 lowered them better. They're the best they've been in your lifetime, like what you said. So 2017, the 12% bracket was the 15% bracket, and the 22 is the 25, and then it just went up from there. And turns out they're coming back.
Yeah, they're going to come back. And was it the current law for personal tax brackets, I think, changes at the end of 2025?
Correct.
And they call that a sunset. Now, what's important about that is this, that we know the tax brackets for this year as of right now. And we're going to go over that here in a second. But we also know that they're going to go up automatically in the year 2026. So if we defer money or not pay money this year and defer it to the future, we're going to pay a little higher tax in 2026. And that's assuming that taxes don't change. What's your opinion of taxes changing, Alex?
Oh, man. That's a tough one, Brian, but I think they're going up. There's just really no other way to settle a budget or a deficit.
Yeah, well, a deficit, if they decide to settle it, I believe there's many concepts of how to handle a deficit, but there's a lot of things to be funded. A lot of the stimulus packages over the last 18 months have caused more debt for the federal government. And so ultimately there will be paying of the interest at least, and possibly of trying to figure out a way to pay off the debt itself. And the only way for governments to make money is mainly tax return, is taking money from taxes of all forms. So we have taxes federal and we have taxes in Maryland. On today's show, we're really trying to cover mainly the federal tax because that's typically been higher. It's not always higher when you're in retirement, but it's definitely higher typically. So these tax brackets that were created in 2018, there's like the 10, the 12, 22, 24, 32, 35, 37. So if you guys are at home and have a piece of paper, you could draw like steps. And those steps are where you take a step up from 10 to 12, 12 to 22. And you'll find that 12 to 22 is a 10% step. It's a really large step to that next level. And then it goes up to 24. And then the next big step is an 8% jump from 24% to 32%. So for married filing jointly, that's at $329,850 for 2021 when it comes to the taxable income. Now, Alex, single filers pay taxes at a lower amount than a married filing jointly, but it seems to catch them rather quickly, doesn't it?
It sure does. So basically, the brackets for married filing jointly are double the income amounts for single. But a lot of times when you're married filing jointly, you're going to have more of that income for the surviving spouse. So your income's not going to be cut in half, per se, in most cases, if there's only one spouse left, which makes our job even more important. We need to make sure we're maxing out these brackets while we are married filing jointly. Because two things in life are true: taxes and death.
Absolutely. Now, you're saying maxing out the bracket. What do you mean by that?
So one of my favorite things to do is towards the end of the year when we're reviewing with clients is we look at all the income we've had this year and we say, okay, well, where's that going to put us? And if it's somewhere in the 22 or somewhere in the 12 bracket, we want to take more income for that year so that we can fill up that whole step or that whole tax bracket. And that way we're paying money at rates we know and when we want to.
Right. So, I've had some clients where what we do is things called Roth conversions. Roth conversions where you pay tax in a certain year and you shift it from taxable to tax-free to the future. A Roth conversion is a major decision for people, but early on in retirement, if we can look at your taxes in October, November and sort of plan out your current year tax return, and we say, well, if we maximize the 12% bracket or maximize the 24% bracket, what that means is we take out and pay tax at 24%, and then it gets converted to Roth, and then you never pay tax again. So I've done that with multiple clients. That's definitely a fall event we do with many people, where we look at the previous year's taxes, we look at this year's taxes, we take all the income in mind, and we say, well, you've made so much money, you made this much money so far, and there's room for another 20, 30,000 to keep you in that same bracket. And I think that's a pretty interesting way of paying tax with a known tax rate. Now, one of the things that we think is a big deal is this. We know the tax rates today. We do not know tomorrow's tax rates. The general assumption is that in the future, possibly 22, or in the future, 2026, we know for sure, tax rates will go up. As tax rates rise, the money that you put into your retirement and you save pre-taxed, grows tax deferred, and has maybe had some great years of growth, it's going to come out fully taxable at whatever that rate is in the future. So know your brackets so you can plan things such as Roth conversions.
Yeah, Brian, that's one of my favorite things to do, and it reminds me of this client recently that just retired. Him and his wife were fortunate enough to retire a little bit early before Social Security, and they didn't have pensions. And for me, I'm licking my chops. Like, this is a 4 or 5 year time period where we get to show whatever type of income we want. So the first year we sold a bunch of assets that had large taxable gains, and we're able to stay in that 12% bracket and not have to pay the capital gains tax. The following year we started converting money to Roth. Let's pay as much tax now as we can, because we know for a fact by age 72, we're going to have Social Security for both people. We're going to have required minimum distributions for both people. So paying that tax up front preserves that money for the long term at a tax-deferred, tax-free Roth account. And it helps reduce the future tax burden that we know is coming down the road.
Yeah, that's a good thing to do. Now, when you're thinking about tax brackets, there's a sort of different ways of looking at it. One of the things to understand is that when you're younger and you might be working really hard in multiple jobs. So one of the things that we've seen with our tax side of the business is that people that have 3 or 4 jobs, typically each job withholds taxes at the rate of the income for that job, and no one's looking at how they all combine to push it to another level. An example might be for a single person where your combined income between the multiple jobs might be 50, 60,000, but when you add each one separately, they're all below that. And the hard part is that at $60,000, you're in a 22% bracket for single, and then they might be withholding at a 12% bracket or less. And that is probably the reason you might owe when you really didn't want to owe and you thought you're getting enough taken out. The issue is that income stacks up to push into other brackets. In tax planning, what has to happen is this. What is your bracket today while you're working? What is your bracket in your early years of retirement? And as you go from 60 to 62, 67 to 70 to 72, taxes change. One of the biggest issues is that at 72, all of the pre-tax money you've ever saved, you must start taking withdrawals, and that might trigger you into a whole nother bracket. One of the examples I had in the last week was this client was extremely successful in saving money for IRAs in retirement. And then the husband passed away, and now it's only the wife. And the wife has this $2 million IRA. They're going to have to take out, let's just say, roughly $90,000 in the next year when she's 72. And the hardest part is that kicks her into that 32% bracket and above. And so we're trying to do tax planning now. Some of the tax planning that we're doing is doing Roth conversion at this year's rate. Roth conversion during the year that her husband passed away so that we could pay tax at a joint rate. And then we're also doing all charitable giving out of the IRA because she's over 70 and a half. So there's some complex ideas. What do you think, Alex?
So you hit on qualified charitable distributions, all kinds of different stuff, man. That sounds like a segue if I've ever heard one.
Oh, I'm trying to segue, even though I can't ride one of those things, but I do like to segue. One of the coolest things about winning in retirement is we want you to win in retirement. Whatever is right for you is the answer. At Akers Financial Group, we're local, we're independent. We don't report to a big company on Wall Street. We report to you. We have offices in Forest Hill and Lutherville, and with the virtual meetings, we're meeting clients all around the country and around the world. This is all about you and your retirement, not about us. To begin winning in retirement, call Akers Financial Group to schedule your free meeting. Call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you can leave a voice message, and Susan will call you back on Monday to schedule a virtual meeting through phone or Zoom, or an in-person meeting with Mass to Mass with one of our team of advisors. Start planning your retirement now. Call 833-946-7384 or visit us at AkersFinancialGroup.com. Pay tax now and never again. Advice you need to act on. We will explain in the second half.
Long before 18-year-old Brooks Robinson was signed to play third base, and years before Natty Boh began brewing at the corner of Conkling and O'Donnell Streets, Baltimore families relied on the Evans family and the Evans Funeral Chapel and Cremation Services to help them during some of their most important family moments. Hi, I'm Charlie Evans, and for 4 generations, my family and I have been there for families, providing care and compassion in their time of need. Evans Funeral Chapel and Cremation Services provides the best facility, staff, and personalized service for your family. We have 3 convenient locations to serve the community: Parkville, Forest Hill, and Hereford. For more information, visit us online at evansfuneralchapel.com or call 410-665-9444. Evans Funeral Chapel and Cremation Services, serving Baltimore families since 1865. I invite your confidence.
Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Akers Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Alex Monk. We're certified financial planner practitioners from Akers Financial Group. Now, this second half is just beginning to start. We might be coming out of the huddle, or out of the halftime, or out of the dugout. Alex Monk, were you a baseball fan growing up, or a baseball player, or a basketball player? What was your main sport growing up?
Well, when I was younger, Brian, it was baseball. So, if it were coming out of the dugout, I had to make sure I had both back pockets full of sunflower seeds, a piece of gum, the works going on. It's a baseball thing. And then started playing basketball later, and they wouldn't let you eat sunflower seeds inside, so I was a little upset about that.
That's totally understandable. Yeah, I was a combination of as many sports as I could play, but when it comes to, coming out of the dugout for baseball, to me it was just like chewing on my glove was my halftime thing, which is funny. Now, what I got to tell you about is that this second half, we got a lot to cover, a lot to go over. And what we're going to talk about is paying taxes now and never again. This is advice that we need you to act on, because today's show is about understanding the game of taxation. You need to understand, pay tax now and never again. Now, when we say this, Alex, what do you think we mean?
So what we're talking about is Roth IRAs, and most work plans out there, whether it's a 401k, a 403b, TSP, whatever you got at your current employer, they probably offer a Roth option. So Roth is money that you already pay tax on at whatever your bracket is today, and it goes in there. After tax, it grows tax-free, and then when you're in retirement, you can access that money tax-free. Now, if you get a match or anything like that from your employer, that's great, but it's going to go in pre-tax. So by having the two different types of money in your retirement plan, hopefully you have more, but we'll talk about that later, it gives you balance. If all your money is pre-tax, you do not have any other options but to take money out and have it taxed at ordinary income rates, and you need something. That sounds like a forced hand to me, and I don't ever want to be in a situation where I only have one option. I always want to be able to make a decision, not be forced into anything.
And when we get clients that are 1 year out from retiring, and they've done a good job of saving through work, but really have saved nowhere else. And so they're retiring into a situation where every dime of their money is pre-taxed. That means everything they pull money out of, they have a partner. They have the federal and state government ready to take taxes on the withdrawals. Now, this is something that you need to know ahead of time, that if you have a very sizable 401k and it's all pre-taxed, not all that money is yours, because you got to pay tax on the way out as you withdraw. Based on your state of residence, as you retire and as you withdraw, you'll pay tax according to that state's rules. And that's things you need to know. So if we could ever go back in time and say to clients at a younger age, especially in 1998 when the Roth IRA came around, you really should have done this. Now, shoulda, woulda, couldas is not that great in financial planning unless we have younger clients or younger listeners that are out there thinking, well, what should I do now? What would you recommend, Alex?
I mean, I love Roth. pay it ahead of time and never again. You're still going to have money in your plan that's pre-tax if you get a match, so you can't do it for all of it. But I think paying it earlier, the better. It just helps your money grow so much more if you don't have Uncle Sam sticking his hand out. And a lot of people that I see, they come in, they're like, well, I'm retiring next year. All my money's in my 401k. I'm going to retire a little early, and the first year I'm going to take out, I need $100,000. So then I have to go over, okay, to get that 100, you're going to need to take out XYZ, so typically at least 130,000, something like that. And the math on taking a huge withdrawal like that early in retirement can really affect the projection of your money over the long term. Like, that can really mess up your plan, and that's why we always want to have people have different buckets of money. So there's different taxation, and there's different games that we can play to beat the taxes.
Yeah, so the Roth IRA, because we are limited to what we can contribute, is something you must do over time. So Roth IRA is so personally, if you're under 50 years old, you can save $6,000 a year. That's $500 a month. If you're over 50, you can add an extra $7,000 a year to a Roth IRA. But then there's some cases where people max out their income and they're limited, and they basically are told they cannot do a Roth IRA at all. But what happens is that over the last few years is that employers have come out and are able to do Roth 401ks, Roth 403bs, Roth TSP. We recommend this very highly in the fact that the money is coming out of your pay. You do pay tax on the contribution, and then gets put into the company plan, and then your portion, the amount of money that you, an employee, put away, is then growing tax-free. The employer match is always going to be still pre-taxed. So within the 401k, TSP, 403b, you're going to be building two sides of that bucket, a Roth side and a regular IRA side, or what they call pre-tax, which means taxable later, growing tax deferred. The concept years ago was that when you are basically working and there's no longer a pension, you need to put your money away. So what they told us is you put your money away pre-tax, company matches it. This will grow, and grow. And when you retire at a lower tax bracket, what's great about that is you're going to be able to pull this money out at a lower bracket, and you'll be in better shape when you retire. What do you think of that, Alex?
It sounds like they get less money in retirement, and that doesn't sound like a whole lot of fun to me, Brian. I like to spend money.
Absolutely. So less bracket means you're actually a tax bracket. That means if you're lower, that means you're making less money. You're paying less tax because you don't have the money. So the game that we want you to understand is this: is what do you want in retirement? Do you want to be able to be 85% of your pay to 100% of your pay? Well, that means you're going to be in the same bracket, unless you do some Roth retirement savings early and often. We can be aggressive in Roth and get this money to grow and grow over time. So Roth, IRA, 403b, 401k, TSP, whatever Roth version you do, we highly recommend that you consider doing it, and do it tomorrow. Sign up for it. Get it done. It's a great way to save your money, pay tax now, and never again. And then there's also something called a Roth conversion. How does that work, Alex?
So that's where you take your pre-tax money and you pay tax on it now. If you're not 59 and a half, there's no penalty on a conversion, but it is taxable. And Brian, one of the biggest mistakes of Roth conversions that we see is people withhold the taxes from the transaction. So let's say you have $100,000 in an IRA. You hold 22% federal and 8% state if you live in Maryland, and now you have $70,000 in your Roth, but $100,000 of income. The math on it doesn't work that way. You need to have the cash outside of your IRA to pay the taxes, but it works out really nicely if you're able to do it. And there's some awesome planning techniques where you can do large charitable donations if that's something that you already do, and use that to offset a Roth IRA. There's a bunch of different ways to play the Roth conversion game. It's just about figuring out what you can do in your own personal situation.
Yeah, Roth conversion is a way to take an existing 401k after you maybe left a company, or a regular pre-tax IRA, and you pay tax in that year. So if we think 2021 is a great year, maybe the last year of these great brackets, Roth conversions is something that you need to talk about with a financial advisor. There's also two other topics you need to talk with to a financial advisor. One of them is called a backdoor Roth. This is for people that hit a limit where they're not allowed to do a Roth contribution, and there might be a way for you to actually get some money to a Roth. And then there's the next level of planning called mega backdoor Roth. The mega backdoor Roth is for people that work for larger companies that have an after-tax ability to save or the ability to do deferred comp. This is a way where you can put some money like that and save it throughout your career, and then at retirement, this after-tax money, you have the amazing ability to roll it to a Roth IRA instead of just cashing it out. Many people take after-tax money with a check when they retire. We recommend you roll it to a Roth IRA to keep it tax-free.
Absolutely, Brian. I mean, you can always pull it out of that Roth if you have to. Hopefully you've had one open for 5 years, because there's different rules in that space. But if you take it out as cash, you can't go and put it into a Roth. You can't just dump it in there. So these are things you get one chance at, and you got to do it right.
Yeah, absolutely. Now, the hard part is this, is if you're 65 years old and then you're thinking about, oh, wow, these all sound good. What can I do now? Well, there is some planning that can be done between now and 72. If you're over 72, can you still do planning like this? The answer is absolutely yes, you can. You can actually convert money above your required minimum distribution. So there are some ways of doing a little bit. Understanding your goals, your taxation, trying to get this money at the least amount of tax, or actually the concept we have for this quarter is pay tax now and never again. All extremely important, because we want you to be able to retire and to win in retirement. Because we want retirement to be where you get your time back, where you decide how to use it. Before retirement, your time is always tied up with other commitments, mainly your job, and you got to pay tax on all that, right? So a lot of that goes away, all that time. What we want to do is make sure your time is consumed by things you want to do. You want to begin winning retirement? Go ahead and give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave a voice message, and Susan will call you back on Monday to schedule a free review, a free meeting about you and your situation with one of our team of advisors. This could be a phone meeting, a virtual Zoom meeting, or an in-person mass-to-mass meeting with one of the team of advisors that we have at Akers Financial Group. Start planning for your retirement now. Give us a call at 833-946-7384 or visit AkersFinancialGroup.com. There are some very common mistakes on tax returns that you might be making right now. We will explain in the fourth quarter.
The choice of your child's school is vitally important. Wouldn't you go a few more miles for something really special? I'm Brian Wilson, principal of Harford Christian School. Harford Christian is an independent school in northern Harford County, serving students in preschool through 12th grade. Our Uncommon Core makes all the difference. For nearly 50 years, we've partnered with parents in the important responsibility of training children in God's truth. Our biblical worldview stands in stark contrast against today's culture. At HCS, political correctness is never prioritized above God's unchanging truth. We hold the bar high as we prepare students to serve God's kingdom, not just the workplace of man. Affordable tuition and transportation options put the choice of Christian education within your reach.
Come visit the longest established Christian school in Harford County. You can become acquainted with us through a private tour or on the web at harfordchristian.org.
Akers Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals. By discovering the purpose of each financial decision, we can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at akersfinancial.com. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. We have entered the fourth quarter. I'm Brian Akers, and here with me today is Alex Monk. We're both experienced financial advisors with Akers Financial Group. We've been working together for many years, and today's show is called Understanding the Game of Taxation. So when we're talking the topic of the game of taxation, we're bringing up certain topics that we think apply to many people. But we never know what applies to you because we need to get to know you. We call that your financial fingerprint. One of the things we highly recommend that you do is you take a look at our website, akersfinancialgroup.com. On that website, what you'll see is our phone numbers where you can call. You'll see a way to contact us. But you'll also see tabs up top. And it says things such as documents and radio and webinars. These are all sources of information that can help you get to know us and help you educate yourself so you know more about each and every topic. Under the radio tab, when you click that, some of the things that you'll see pictures of us. We're really made for radio, which is cool, and we enjoy that. But also on that webpage, you'll see information such as each and every past show we've had there for you to listen to as a podcast. Under webinars, you can see different webinars that we put together that you can listen to or watch that have been put on the web throughout last year and even the beginning of this year. We do a new one every 2 weeks. So make sure you go to akersfinancialgroup.com and check out our information that we have for you there. Now, here in the fourth quarter, it's winning time. It's time to finish strong and do well. Now, as we begin this fourth quarter, we're starting out with a question that is this. There are some common mistakes on tax returns that you may be making right now. And so, Alex Monk, what are some of these common mistakes that you've seen on people's tax returns?
The biggest one I've been seeing recently, Brian, is people are not putting in all their itemized deductions because they think, hey, you know what, I'm only going to qualify for standard. Well, sometimes it may benefit you to take a smaller itemized deduction on the federal side, and that would result in a total net benefit because of the impacts it has on the state side. That's one of the big ones. The other one we talked about earlier that you mentioned, Brian, is that if you don't itemize, you can still get credit for up to $300 worth of charitable deductions. People, they're like, I don't itemize anymore, so they don't tell their people anything about that. You need to put it all on there and then see what the best way is to file based on all the information. And one of the weird things going on this year is they're passing laws this week as we speak that could potentially have impacts on the return you're filing now. So that's something that has to be monitored, and people out there might have to file amended returns if they had unemployment income, because the new bill supposedly gives you a break on that from your income. So there's millions of people out there that have already filed. There may be issues by filing too early, so it's just a really strange year in that respect.
Yeah, there's a lot going on. I mean, with the new bill that was just signed into law, the unemployment, there's a certain amount that's tax-free, and that's got to make sure you don't pay taxes on the unemployment you received last year. Very, very important. Now, the stimulus checks that came last year, there are also when you do a tax return, the tax software asks for those numbers, not because they report as taxable income, and not because they're actually going to say you're overpaid and you got to pay back, but they're checking to make sure that you receive your full stimulus checks from last year based on your income. Because some people, when they did stimulus checks, it was based on 2019 tax return, and maybe your 2020 taxes went way down, and that reduction in income might allow you to get a stimulus as you file your return this year.
Yeah, and in some cases, it's worth a lot of money. I mean, if they're going to give it to you, I got to take it, right?
Yeah, there's a lot to the package that's coming out recently. A portion of the package does apply to COVID and to stimulus and to earned income credits, things like that. And so understanding that and how it applies to you will be something you need to research over the next few months. Another big piece of advice when filing your taxes is we believe you should do it electronically. That gets things submitted a lot faster. You get your refund a lot faster. By mail could take a long time. Is that what you've been seeing, Alex?
Yeah, I don't know many people that still send them in by mail. I have maybe one or two clients that still put all their numbers in with a pencil, and I'm just quite amazed by that. But it's super weird.
Well, the IRS said it had there was like an information thing I was reading saying that they're still working on paper returns for 2019 as we began this year. Now, some of the strange things this year is that you really couldn't turn returns in until February 12th, and then they're still keeping the same deadline of April 15th. We have this bill come out with new information. People might have to amend. What's a simple way of explaining what an amendment is?
An amendment's kind of like a do-over. You send them in whatever your original amounts were, and then you show them what's changed, and you write a little thing on the bottom that says, this is why I'm filing this amendment, and hopefully you get money back, but a lot of times it doesn't always work like that.
Also in 2020, many smaller investors around the country started to do stock trading or even cryptocurrency trading. Now that triggers taxable events also, right, Alex?
Oh, absolutely. So there's probably some people out there that are figuring out what a short-term capital gain is. And that is something that's counted as ordinary income on your tax return, and it is not fun if you are not prepared for it.
Yeah, so certain words Alex just said was short-term capital gain. That means less than 1 year, and that you hold a stock. So if you're day trading, this is always taxable at the full bracket, not a capital gains bracket. Now, can you explain the differences of the two brackets, capital gains and ordinary income?
Sure. So capital gains are done differently. They use your ordinary income tax bracket as a guideline for how much you will pay in capital gains tax. So if it's short term, it's going to be counted as ordinary income. If it's long term, meaning it's held over a year, if you're in that 12% bracket, and that 12% bracket includes your whatever gain in your income. So don't think it's just your income and the gains aren't counted in there. It's all added together to get to that AGI, as you said, Brian. And then it's subject to tax. So if you're in that 12% bracket, you might not have to pay any tax on your capital gains. Above that, from 80,000 married to about $500,000, you only pay 15%. And now that's a big deal for somebody that makes $500,000, because if they hold that stock for a year and a day, they're going to pay significantly less tax than they would if it was a short-term transaction. And then once you go over $500,000 in income, it's 20%. So that's just a much better top-tier tax rate than ordinary income. And that's why a lot of wealthy people get accused of not paying enough tax, because they structure their income as capital gains and things like that.
Yeah, especially Warren Buffett. He's had the same salary for a few decades, takes all of his income as dividends. And so that gives him the capital gain on a dividend. So long-term capital gains are dividends, qualified dividends from stocks, and also from buying and selling. So those were some prizes that occurred at the end of 2020 because mutual funds also did a lot of trading. And so people that might be surprised by the taxes they owe might be because of what they own. Now, when you're buying mutual funds and ETFs right now, what you got to be careful on is this. You could buy a mutual fund at the stock market high, and then the market go down this year. And if that mutual fund at the end of the year kicks out a long-term capital gain, you might have lost money on a fund and had to pay tax on a capital gain that you never earned. So there's some vicious little things about investing you need to know when it comes to taxation, especially in a market that went up very quickly in 2020 from the bottoms. So understanding your situation is very important. We want you to learn from the days this. You need to understand the game of taxation and how it works in your exact situation. That's what financial planning is. It's not just investments. It's not just how to save and how to grow and where to put your money. It's about it all coming together. One of our biggest expenses in retirement is our taxes and, of course, insurance, but taxes are huge. Let's pay the fair share, but not a penny more. Any final advice on understanding the game of taxation, Alex?
Most people listening, I praise you for listening to a tax show. It's tough, but I get jacked up about this stuff. I absolutely love trying to save money on taxes. It's just, super nerd over here, but I love it.
That's exactly what I was thinking, but I agree with you. One of the things we do ask that people bring in their first couple meetings is the last 3 years of returns, because we hear your story, then we look at the tax returns, and we might be able to come up with ways to save. And do you know you can amend back 3 years and actually get refunds on things that you find that were done wrong? Just some good advice. So understanding the game of taxation is our title for today, but it is something that you must begin doing for your own benefit now and for your benefit in the future. We want you to be ready and winning in your retirement. Maybe you are currently in like a reaction mode, defensive in every way. It's like you're sitting on the sofa and you keep moving back and back, reacting. Reacting has the energy of being defensive. Creating, now you sit up, you sit forward, you have the forward moving energy of creating. The people who get through all this that's been going on in the best shape are the ones who take this opportunity, this time, to be in the creating mode, in the solution mode. It's a choice. We want you to be winning in your retirement. So go ahead and take advantage of this opportunity to begin planning with us at Akers Financial Group. To schedule your free meeting, give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule a phone meeting, virtual Zoom, or an in-person mass-to-mass meeting with one of our team of advisors. Start planning your retirement now by calling 833-946-7384 or visit AkersFinancialGroup.com. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on Winning in Retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment.
Knowledge is power. How much better would life be if you had the power to provide a financial umbrella for your family? Protect your estate? Retire without any lifestyle compromise? Obtaining this kind of knowledge is as easy as making a call to Akers Financial Group with a focus on helping you make decisions that reach far beyond the typical life stages. Akers Financial provides comprehensive, innovative, and personalized wealth management services. Call us at 410-692-9870 or visit our website at AkersFinancial.com.
Member FINRA SIPC.
Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Akers Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
Appreciating was a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates. Broadcasting from the Thompson Creek Window Company studios, the one window replacement company that does it all. This is WJZ-FM, HD1 Catonsville, Baltimore. 105.7 The Fan, a radio.com sports station.